that. Mayuresh, I want to get your thoughts in on Tata Motors for sure. I mean, whether the dream run can continue. That stock's not too far away from its 52-week high. And in case you track Biocon, your thoughts on the development from Europe?
So first on Tata Motors, Surabhi, again on a year-on-year basis, I think the performance should be quite reasonable for Tata Motors, both in JLR terms, where our own expectations is a 13% rise in volumes taking place. Realization should be quite stable, and on the JLR front, because of the new launches that we've seen and the good response both on the wholesale and the retail side, the margins should hold up beyond 15% for JLR. On the standalone business, I think you will see some amount of increase on a year-on-year basis on the CV side of the business, but largely I think the quarter-on-quarter performance in terms of both volumes and realizations will be a little bit soft. But on a YOY comparison, I think the stock should have a 5.5% operating income uptick. You should probably see a profit between 2600, 2650 odd crores. And largely again, I think the platforms that Tata Motors is launching, the kind of launches on the PV segment, even in India, I think that should hold up the PV business and the volumes quite steadily. So again, I think maintaining my positive outlook on Tata Motors from a long-term perspective. For Biocon, I think the approval that they've received, specifically from the European agency, I think a positive development on that front. The biosimilars portfolio has been doing quite well, and over the past few quarters, Biocon has upfronted or uploaded rather the R&D cost in a significant manner. So in that sense itself, I think all these efforts paying off in terms of key approvals coming through from various regulators. So again, I think the positive moment should be seen in the stock, at least in tomorrow's trade.
Okay, so those are some stocks in focus. Let me add one more to that list, and that's going to be J. Kumar Infra Projects. And that's because after all the confusion surrounding whether it'll get that coveted Mumbai Metro Line 3 order or not, the company today came out with an announcement to the exchanges saying that it has indeed bagged that order. The value is pretty significant. We're talking about an order which is going to be over 5,000 crore rupees. The stock today itself, of course, closed in upper circuit. There was a 5% circuit going on the stock with, of course, a lot of excitement around this potential order win. So that was today's performance on J. Kumar Infra. But if you take a look at the last 1 year, then of course it's been a major laggard. All right, so on that note, Mayuresh, some final thoughts. I mean, lots of these individual stocks obviously are flying around for either the right reasons, the wrong reasons. There's Welspun that's been the talk of town this week. There's J. Kumar, which might be in focus tomorrow. What is it that you would advise buying now?
Again, from a sectoral perspective, again, private sector banks, NBFCs, specifically catering to the housing finance segment, is something that we still believe in a staggered way on corrections can be looked at. Cement stocks have moved significantly, but our own take is that post Q3, I think with the kind of infrastructure and developmental push, and again I think the real estate push that the government is embarking upon, the utilization levels should improve significantly over the next few quarters. Realizations should remain stable and start increasing quarter after quarter, and that will give the operating performance on cement companies' balance sheet, because a lot of capex probably has come through. Largely I think EPC is a theme that I continue liking. PNC Infratech is one stock that I'll probably like to highlight. Any correction onto these stocks can be taken as a buying opportunity. I think a large order book of around 5,500 odd crores. They've posted margins of around 17% for FY16, PAT margins of 9%. The kind of debt that they've got on its book is quite reasonable for an EPC player, and that entire debt is on the BOT project portfolio, which is completely operational at this point of time. They're bidding in for the hybrid annuity projects, which is extremely margin accretive for the company going forward. And even on the EPC theme, I think the management expects 4.5 or minimum 5,000 orders to probably flow through in this fiscal with greater margins. So my own sense is that the operating performance should improve for PNC Infratech. Any decline onto this stock, and within this theme itself, I think EPC should do well over the next 4 to 6 quarters.
Okay, Mayuresh, great having you on the show. Thanks for joining in, of course, sharing